Welcome back. It's time now for Top Picks with our guest, Andrew Moffs. He, of course, is an expert in real estate securities. Up first is First Capital Realty, ticker symbol FCR.UN in Toronto. Andrew?
Yeah, so First Capital REIT is a top pick of ours, one of the largest holdings in our fund today, because the portfolio is one of the highest, if not highest quality grocery anchored shopping center portfolios, not just in Canada, not just in North America, but globally, and trading at a very wide discount to its private market value. We think upwards of 25%. It owns 22 million square feet of defensive grocery anchored real estate, necessity-based shopping centers just across Canada's major urban nodes, plus a further 23 million square feet of potential further development that's incremental to its existing retail base. When you look at the company, what management is doing, they have embarked on a three-year strategy where they're looking to increase net asset value and FFO per unit by more than 3% annually, while at the same time reducing leverage. How are they doing that? They're selling non-core properties. At the same time, they are getting entitlements on all that square footage of zoning future development that I described. So it's a bit of a flywheel where they continue to monetize some of those entitlements. As they get through the zoning process, they sell them, and then they go back to the well and further entitle, create value, and sell. And at the same time, we think you're able to buy a company trading at such a wide discount, such high quality, with a near 5% distribution yield. We think that's quite attractive as the company continues to close the gap. This is a REIT that used to trade at quite a big premium. So we think it's warranted, the premium that is, and is on track to close that gap.
Number two on this day, Chartwell Retirement Residences in the senior care space, CSH.UN on the TSX. Andrew.
Yeah, Chartwell owns over 25,000 suites across Ontario, Quebec, Alberta, and British Columbia. So pretty easy to value in terms of owning one of the largest retirement portfolios across the country. They, like every other senior housing operator, suffered through the pandemic, lost a lot of occupancy, and has been on a strategy of improving those occupancy rates, and has done a tremendous job of filling up its units. Today, occupancy sits all the way back near 90%. When they had put out a goal to the market of getting 95% occupancy, people thought that was a little ambitious. We thought it was possible. Why? Because we're finally seeing the leading edge of the baby boomer population using this product. It had always been the demographic wave that people were waiting for, and now the penetration rates have increased, and people are now looking for this form of retirement living, and Chartwell offers a great product. The stock trades at a discount to net asset value, yet recently they've been able to put their capital to work and expand their portfolio, and we think they're doing great accretive acquisitions, so we continue to expect net asset value growth as occupancy increases. It's a very high margin business, increasing occupancy at these levels.
Okay, Chartwell's number two and number three, and these picks are not ranked, by the way, in terms of any preference. They are just the order that Andrew has brought them to us. Empire State Realty, ESRT in New York. What does Empire do, Andrew?
Yeah, so Empire owns a portfolio of primarily office buildings across New York City, as well as a bit of a retail portfolio and some multifamily assets. In all, about 60% of its NOI comes from New York office, call it 15 to 20% from retail multifamily. And then the balance is from the flagship Empire State Building Observatory, which is about a quarter of its net operating income. And that was recently voted the #1 attraction in the world. It's iconic. So why do we like Empire State? I mentioned earlier, we like the Manhattan office market. You're seeing increasing leasing volume and tenant utilization. This is a market about haves and have-nots, meaning there are some well-capitalized building owners and some poorly capitalized building owners. Empire State is certainly one of the well-capitalized ones. They are attracting tenants to its portfolio in what we call the Midtown South market. They offer more of a value proposition for those tenants that can't afford $200, $250 square foot rents. They can offer more, something in the $100 square foot rent area. And what we love about this REIT, in addition, it's trading at a big discount, 28% discount to net asset value. For those that care about sustainability, this was #1 listed out of all, #1 in terms of sustainability out of all listed REITs globally. And that's pretty good when you own the Empire State Building that was built in 1931.
Andrew, thanks a great deal as always. Thank you to our viewers as well. That's Market Call for today, Trading Day, and Andrew Bell up next.